Hello, welcome back to my channel. This is Josh Morris, and today I have a very interesting video for you today. I'm going to tell you how I made £1,000 yesterday on a single trade. How I did it is something called leverage trading. And I have to warn you, first of all, this is a very unsafe way of trading. So if you've heard of this term before, don't listen to anyone who says this is easy or this is safe or this is or you can do this. Just sign up with my affiliate link to this some sort of trading platform or something. Be very wary of those people because leverage trading is very unsafe. Now I'm going to take you into my trading platform. I'm going to show you the trade that I did. I'm going to show you the method of the trade that I did, and I'm going to break it down so if you wanted to follow a method like this, you could, and if not, you could just learn and maybe learn something new today that you haven't learned before. So first of all, I'm going to give you a little bit of a background. In secret, and I've been keeping this a secret, I've been keeping this to myself for a very long time, haven't shared this much on the channel. I've mentioned Bitcoin and a couple of trading things here and there, but I've never really talked about it that much, and that's because I'm afraid to share this with people and then they go and do it and they lose their money and they come and they blame me. So of course none of this is real financial advice. Of course this is education only. Infotainment. What's the word? Edutainment. It's education. It's entertainment. So a little bit of a background. So I've been studying trading and markets and how to trade for the last 2 years, right? So it's a long time. 2 years. I've spent three school terms with a group called The Rational Investor, started by Brian Beamish. He has an amazing team over there, and he's become my mentor, and I actually met him. I flew to Vancouver for a meetup last year, and I'll tell you all about that in a different video. That was an amazing trip, and actually my trading paid for that trip, so it's a testament to how much his lessons learn. And Brian, he's been trading for 30 years, so this guy is an absolute genius when it comes to the markets. And also I've practiced hundreds and hundreds of trades over the last few years. So it's taken a long time to get to this point, and it's not easy, okay? So I'm going to jump into how I made £1,000 trade yesterday in a little bit. But first I want to give you an introduction about how leverage trading works. So I'm using a platform called BitMEX. Now there are many platforms for leverage trading. You can often leverage trade with stocks. It's very common to leverage trade with currencies. I'm sure you've heard a lot about Forex trading. And again, anyone who tells you it's easy is speaking out of their butthole. Like, I'm not going to be rude, but I mean, I guess that's a bit rude, but it's true. This is not easy. 90% of traders lose money. Let that sink in. 90% of traders lose money, and the people who make the most money are the guys at the top who know what they're doing, who manipulate the markets, who manipulate your emotions, and you've got to be really careful if you actually want to do this. So let me tell you about how leverage trading works, and I'll show you. You can see I've got a trade on. If this is all confusing to you, don't worry, I'll walk you through it. And if you want more information about this, let me know in the comments below and hit a like, and that tells me that you are interested in this, and I'll make more tutorials on how to actually trade with this platform. So you can see I have about $7,000 or something in this trading platform, and you can see this is the place where I can place my order. So if I put 7,000 in here and I have 1x leverage right here, you can see the leverage amount. You can see it says right here leverage, and that's the leverage amount. So I have 7,000 and I can click buy, for example, or I already have a trade on, so I can. Okay, so I'm not. Because I'm in Ethereum. Okay, so if I put 10,000 here, if I put 3,000 here, that equals to about my account size. So you can see here, I can confirm my order. But then if I put 6,000, you can see over here, it says order submission error. It could not be submitted because the margin requirement is higher. So if I increase this 2x to 10x, what that means is I can now borrow up to 10x my account, and they will lend it to me for this trade. So you can see I've put 6,000 here in, and now I can actually do it. Now if I put 12,000 in, you'll probably see, oh no, that's allowed. So let's put 20,000. That's also allowed. So because I put it to 10x, I'm allowed to really do a lot with this. So I put 30,000. Let's try and find the amount that it's not going to allow me. 50,000? Okay, so 50,000, order could not be submitted. It's too much. But then if I put this up to 35x and I try with 50,000, there you go. I'm allowed to put this order in, right? So I don't have that kind of money in this account, and I'm actually going to remove a few zeros here because I feel very unsafe having that there. But what you can see here is that by increasing my leverage, I'm borrowing from the exchange, so they allow me to place a trade with money that I don't have. So if I only have 1,000, I can, with 100x leverage, I can borrow up to 100,000. Now, what does this actually mean? Because it sounds great, but it's actually very, very dangerous, okay? So let's say I borrow 100,000 and I only have 1,000 in my account. Now, what happens when the trade goes against me by 1%? 1% of 100,000 is 1,000, I think. Let me check my math. 100,000 times 1% is 1,000. Now, if I only have 1,000 in my... I was never good at math. If I only have 1,000 in my account and the trade goes against me by 100%, if I have a 100,000 contract trade, then what that means is I cannot owe the exchange any money. So as soon as I go into the minus of 1,000 and that reaches my account limit, they do what's called a liquidation. They immediately close the position and they take all of the money. They take the whole thing, right? So you can see why it's dangerous. Now, why is it beneficial? Well, because if I put 100,000 on a trade and it goes 5% in the right direction, then that's 5,000 contracts that I'll gain, right? So I only have 1,000 in my account, but I'll gain 5,000 contracts. So the risk is very high and the reward is extremely high. Now, I don't recommend using leverage at all if you're a beginner. I don't even recommend it if you're advanced. I didn't start using leverage until I had traded over 100 trades. So be really, really careful with leverage. But that's just an introduction about how leverage works. You borrow money. You essentially borrow risk because you're saying that I'm risking this money, and then if I lose, then the exchange can take it all via a liquidation. Now, I've only been liquidated once, and it was a mistake because I used fat fingers and I button pushed and I did something wrong. And let me just lower the leverage here because I'm a bit afraid of keeping it on high leverage. It's very dangerous. So that's kind of how leverage works, right? So that's how you borrow risk in order to gain a higher reward. And this is how people are making tons of money. And it's how I made £1,000 yesterday on the trade. So I'll walk you through the trade, and I'll also walk you through my 3 reasons for taking a trade, which I've learned from Brian Beamish and my years of studying this. Okay, so let's break it down a little bit, and I'm going to show you a few screenshots. This is my trading log. So of course you can see that it's insanely in depth. So this was my trade. Let me just open up the beginning and I always record the entry and the exit of my trade. So I want to show you this, okay? Right here, I took this trade yesterday. You can see the date, May 21st, 2020 at 4:20 BST. And I took this trade. It was right up here trading at 210. This is Ethereum to US dollars. So it's cryptocurrency. And I like cryptocurrency because there's a lot of volatility, a lot of movement, and it's easy to access. You know, it's much harder to access an actual stock portfolio and stock websites. And cryptocurrency seems to be on the forefront, and they've got really advanced exchanges and everything. So I really love trading with that. So I took this trade. It was 210 at May 21st, and then this was my exit trade, just to prove that I was actually there when I took this trade. It went down to 194, and I took profits. Okay. And it was about £1,000 of profits. Now, why did I take the trade here? Why did I not think it was going up? In fact, a lot of YouTubers were saying that the trades are going up and everything's going up. And if you're a trader and you follow these guys, then you might have thought that the market was blowing up. Now, the 3 reasons I use for a trade told me that everything that I was reading was wrong and that my analysis was correct, and it turns out that it was right, even though I went against the trend. And this is why trading is so hard. You often have to do what the minority of people are doing. You have to do the opposite of what everyone says. Okay, so I'm going to teach you now a few things about trading that I've learned. 3 reasons for taking a trade. So if you want to learn a quick start about how and why I took this trade, then this is the moment, okay? So the 3 reasons are location. As you know in business, location, 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 very important. Momentum. When something has momentum, it's showing that it's going in that direction. And finally, market structure, which I will explain to you in a minute. It's a really simple concept to understand. So the first thing is location. And I use something called a Fibonacci retracement tool. So you can see it on the screen here. This is a Fibonacci retracement, and this is a Fibonacci retracement, and I'll explain why you draw them and which way. But you can see this essentially shows this is from 1 to 0 with the percentage in the middle. So this is 50%, you can see the 50, this is 61.8%, this is 78.6% or whatever it is, right? And what these are these relate back to the Fibonacci ratio. If you haven't heard of Fibonacci, the Fibonacci ratio is an incredible mathematical anomaly which seems to be rampant everywhere in the world. If you look up Fibonacci spirals, you can see they are in waves, they are in hurricane patterns, they are in the universe patterns. When you actually look at galaxies, they are in the shape of a Fibonacci spiral. Mathematics comes back to this all along so many times. It's related to pi, it's related to circles, it's related to the very nature of the universe, and of course trading is all just people and human behavior, so of course it shows up in trading, and I'll show you how. So what you would do is you would look at a range. So you can see the market went down here, and I'm showing it on a line chart because candles, which is my favorite way of analyzing the market, can be a little bit confusing for a beginner. So I'll keep it on the line chart just for the moment. Lines are easy to manage. So you can see from the bottom here, right, there was a little button. I'll remove this so you can see. In fact, I'm going to hide them. Disable order display, disable position display. Okay, so you can see this little range here. Now this is the bottom and this is the top. Let's just say, you know, you can pick bottoms and pick tops depending on many things. But what you would do to draw the Fibonacci is you would draw it from the bottom to the top, and the Fibonacci retracement tool is telling you what percentage of this move is going to retrace, and that's where you can start drawing your orders, or start managing your trade, or start figuring out where you want to enter or exit. Okay, so for example, you started down here and you draw it up here, so you can say that the market is going to come down 38%, or 50%, or 61%, right? So 61.8 is actually the golden ratio. 1.618 is another golden ratio. So it's very powerful numbers. So if I zoom out here, you can see that what I did was, from this top, you can clearly see it's a top because the market went up and then it came down. That's clearly a top. It didn't go higher, so that is the top. So you take this top and you start drawing your Fibonacci tool all the way down to the bottom, and the prediction is saying how much is it going to retrace, right? So very often it retraces between the 61 and 78.6 range. So this is your location. So when the market comes into this location, you know you have to start paying attention. And that's all it's saying. It's not saying take the trade. It's not saying do anything. It's just saying pay attention. So what happened? The market came all the way back up. And of course, it came right to the 61.8 and it started to turn around. Now, then you can draw another Fibonacci retracement saying, okay, if it stops here, how much is it going to go down? Right? So you draw another tool from here to here, and you could say, okay, maybe it's going to go down to 38.2, maybe it's going to go down to 61.8. So all this is doing is saying, look out for these locations. Okay, now you don't want to take a trade in the middle, you want to try and take trades at the top. So why did I take a trade over here? So I took this trade because I drew another retracement from the top here, down to this bottom, right? and the market had already started moving up. This is May 21st. So I saw the trade over here, and I'll explain to you how I saw the trade. Okay, so the market came from the top down to the bottom here, and this Fibonacci retracement tool tells me it's going to go back up into these areas here, the 61 to 78.6, and look at what it did. Okay, so it came straight back into this area, and I saw this, and when you see a double location area like you're seeing here, it's within this larger area here, and inside there's a little area here, so it's in two areas. That's a really powerful signal. And then I can also do this, and you can do this for infinity. So you can go really wild with this. You draw it from the bottom to the top here, and you could say how far is it going to go down. So again, you draw a box over here, and you could say it's going to go down to about here, and you can see that's exactly what it's done. So that is location. So I don't want to go too into detail about location, but that is location. Now, the next thing is momentum. And actually, I'm going to talk about momentum and structure, and these are the last two reasons to take a trade, and I'll explain them to you in one simple concept, and that is M's and W's. So I will draw some M's and W's. We're going to have some fun drawing today. Okay, this is an M, right? And this is the midpoint of the M. This is a W, and this is the midpoint of the W. And this low here is higher than this low here, and this high is lower than this high here, right? It then breaks through the midline, and that's when you know you've got a trend. So W's confirm an uptrend, and M's confirm a downtrend, okay? Now I'm going to remove all of this nonsense, and I'm going to show you this with some really simple signs. Okay, so let's go way back in time. What do you see down here, M's or W's? Okay, I see W's. I see W's, right? And it's breaking out. So it's come down, it's come up, it's come down, and it's broken out. What do you think is going to happen? W's equal an uptrend, and you would have made a lot of money on that uptrend. Okay, so let's remove all of that. Let's go further back, okay? What's going on over here? What shape is this? This shape is an M, you see, right? And even a bigger M inside of that, right? So it came up, this high is higher than this high, this is the midpoint, and it's broken down. So what do you think is going to happen? Of course, the market dumps like crazy. So you would have made a lot of money if you bet on the market going down, and we'll talk about that in another video. But that is the concept of M's and W's. That is market structure. Now let's go back a step to momentum. There are many indicators on every chart that tell you the direction of the trade, the direction of the market. So two of my favorites are the relative strength index and the MACD. Now, I'm not going to give you a tutorial on these today because I'm just framing how I analyzed this trade and why I took the trade. Now, the same exact lesson that I just gave you about M's and W's applies to momentum. So here you can see a shape right here, an M, right? So what does that tell you? That tells you the market is going down. Let me just remove those and go back to the relative strength index, and right up here, this was yesterday, I saw this M come in, and of course it tests the neckline of the M and then it comes back down. That's another great feature of these market structure patterns, is that they give you time to get back in. So if you see an M, don't just jump in over here just because it's broken this line. Wait for it to come back up to this area and then get into the trade, so you're in the best possible position. And if I go back in time, you can see that the market does this constantly. Okay, you can see it puts in this big W and then it comes back down to test that level. You can see it's testing that level. Or the market puts in a big M here and it comes back up to test this level. So it constantly does that, right? You can see that right here it put in an M and it comes back up to test this level for another move down. And it sometimes does it, it sometimes doesn't do it. Let's be honest, sometimes you'll miss a trade and that's just the way it works. So let's get back to the trade yesterday. What did I see? First of all, location, you can already see. Location, reason number one, A-OK. I'm shorting, which means I'm betting that the market's going to go down, which means I'm selling and I'm going to buy it back lower. Again, I'm not going to give a detailed tutorial on everything, but I saw that right here we were in two location boxes. These should be red boxes because we are in a short zone, right? So these are red boxes. Green boxes are in a long zone, which means you think the market's going to go up. And of course, we were in red boxes. So I thought, okay, I've got to short, but I have to wait for indicator confirmation, which means I have to wait for momentum. Well, what happened? Right on this level here, you can see I'm only staying before this level because that's when I took the trade. You can see right here, you can see that M right here. Now, I drew this chart before I took the trade. So it's just proof that I was there taking this trade before it came in. So I'm not looking back and saying that I did it. I'm showing you I've done it here. So here's an M, and I saw that. Let's go back to the actual chart. As you can see, that was around this point, and I saw it. And I was like, okay, we've got momentum. Do we have structure, right? So that means market structure. I need to see an M in market structure. So if you can go back to the trade right here, you can see that I took this screenshot with a candle, with candle patterns, but this actually is a confirmed M. So if we can go back to the exact moment, it was 4:20. If I go back to the exact moment, it was right here, right? We were right around here. As you can see, the time zones are a bit different. That was 5, so it was around about here. It had put in this M right here, and it had confirmed the break, and then it was coming up to test. So it was coming up to test, and I was like, oh, it's coming up to test. I've got location, I've got momentum, I've got market structure, my 3 reasons to take a trade, and I drew this trade prediction here. You call it a prediction, but I'm just following the patterns, and I took the trade. I sold, and I put my risk window above here, and I'll explain that in a different video. And then the market came down, and this was my exit. And you can see I always take a screenshot of the entry and the exit, and I got out of about 40 to 50% of my position. And right here at the 61.8, it turns around. And what do you think it did after it came back down to that 61.8 level? As we said before, this is a prediction of how much the market will retrace. So if we assume that the market is going to retrace to the 61.8 level, you can see in this screenshot that's this 61.8 level. It stops right here. Look what it's doing. The market has bounced and it keeps going up from here, right? Now, how far is it going to go up? Now we're talking about future predictions. So we draw another reload zone here. You can see that it's stopping at the 31.8, the 38.2, sorry. And I predict that it may come up to the 61.8, but you never know. You can't make predictions in this game. You just have to trade your setup. I can't take a long position here. We're not in green boxes. We don't have any bullish momentum. We don't have any bullish structure. So I can't take a trade. And that's another thing about trading. You have to be patient to wait for your setups to come in. So that is my trade. That's how I made £1,000 in a day. I put about 20,000 on this trade, which means I needed a bit of leverage because I don't have that much in my account. So I was risking quite a bit on that trade. But because everything had come in, I felt very strongly about it. I was willing to take the risk for all the things that were coming in, and it was a profitable trade. Often my losers are much smaller, and I'll explain that in another video if you like this type of video. And that is how I do my trade. I hope I've given you a bit of warning, a bit of outline, and maybe a great little bit of a tutorial on how to read and analyze the markets. You can see there's a lot that goes into it. I appreciate you watching this kind of a different video for my type of channel, which is very self-growth, but this is about making money, so it's all a part of it. Now, if you like videos like this, hit a comment down below and tell me, I want to see more of this. This is really cool. I'm interested in this. Like the video if there's something that you actually like seeing and you like seeing my monetary results and making money as a trader, which is something I've been doing now for a while, and I'll happily make more videos like this. Thank you so much for watching. That's it for today. This is Josh Morris. Thank you so much, and I'll see you in the next video. Take care. Bye-bye.